Welcome to another FinTech Hive Mind. So, the whole purpose of this podcast is to speak with people that are involved in growing FinTech companies. My guest this week is Ivan Mariuson, the CEO from Monite. So, Ivan, thank you very much for taking a few minutes to talk to us today. It would be great to have you introduce yourself.
Thanks, James. Great to be here. And we've been planning this for some time, so glad we made it. Guys, I'm Ivan. I'm the CEO and co-founder of Monite. We're basically doing embedded accounts payable, accounts receivable, pretty much powering up all those SMB and other propositions inside vertical SaaS, neobanks, payment companies, etc. 4 years old. Most recently raised a $16 million seed round with Third Prime, Valar Ventures, and a lot of great angels from Plaid, Klarna, Neom, etc. Based actually, across Europe, but also got some people in the States, remote first. And to date, we have 26 platform customers, so a pretty good setup. And my background here is, previous to Monite, I actually built Penta in Germany as one of the key SMB neobanks that exited to Konto a couple of years back. And the insight we got during Penta times was literally around the fact that people actually do mind paying a lot of money for transactional banking, especially with so many players being around and everyone willing to give you a card, especially as embedded finance became so popular. And so what we're looking at is like, okay, how can we actually earn more per customer from those SMBs, not only in Germany, but just in general in Europe. And one of the areas that seemed very overlooked was exactly the finance automation. It's literally like, how do I, as an SMB, get paid on time? How do I manage my revenue when I don't have a large finance team or a lot of money to spend on tooling? I just need to make sure the money comes in on time. And also, how do I pay suppliers and just process all those bills that I have to pay and expenses in an efficient manner? And a shocking insight was that actually most of these people were not really covered with any tooling, because the logic the industry was built in historically was like, hey, I'm the best accounts payable tool, and I'm the best invoicing tool, and I'm the best accounting tool, and I'm the best cash flow tool, and et cetera, et cetera. It's like, if you're SMB owner sitting out there, you're like, yeah, I'm not going to get 5 or 7 platforms and pay $300-500 for this. Oh, by the way, they also don't talk to each other. So I'm just going to use my good old Excel and email and, a super manual workflow. And also I'm not super digital native. And so what we looked at Monite in early days was okay, so there is clearly a need. People are clearly willing to pay for it when the tooling works, but they don't want to have 5 tools. So our original hypothesis when we started Monite was okay, there's a clear gap in the market where there needs to be one platform that literally helps people bring all their finance admin together, like payables, receivables, expenses, cash flow analytics, pre-accounting, collect it all, visualize it nicely, and then help them push all of this data into their accounting flow. And by the way, you never want to touch SMB accounting because their accountant relationship is sacred. So you don't want to touch that, especially if it works. And so that's what we did in early days, until we actually got a really interesting insight from all those SMBs that, we want it all in one place, but not on a separate platform. And that was an aha moment for us. And we're like, what do you mean not in a separate platform? And what people would say is look, I use something every day anyhow, my payment provider, my bank, my neobank, my vertical SaaS platform, or something else. It's great you guys have all this functionality. Can you just take all this functionality and put it inside my platform? And they were like, well, not really, until we actually spoke to these platforms. And the platform said, look, we would love to also have this side of the house covered. It's just we're not finance professionals. We're not going to hire a team for this. It's not really our specialty. And then we're like, 1 + 1. Well, these guys want it inside the platform. The platforms actually want more revenue from customers. They want this functionality in. So why don't we let them do it? But this led to us rethinking our whole business and the distribution model, which sounds like a nice growth hack because you're like, oh, look, I wanted to be B2B, but I decided to become infrastructure. In the background, it meant killing B2B business and re-architecting the whole tech to be API first. And that's what we did about 3.5 years ago. And since then, we're pretty much plugging the same functionality into different platforms where we let them service their customer. and we're nowhere to be seen. So we could say like, whatever, this is, invoicing provided by your neobank, etc. Like this is bill pay solution by your payment provider. And so that's what we do. So this story has largely been a combination of just like, getting started in fintech, building one of the early SMB neobanking players, getting lots of market insights, then making a hypothesis and a bet on the SMB market when it comes to finance administration, and learning from customer feedback up until this moment where we finally started seeing some really good deployments, really good usage numbers, and the whole thing is just really picking up.
What you described there, you made it sound so smooth and painless, but what you were describing was a pivot. Like, when was that pivot made? And what advice can you give for other founders that are maybe thinking they also need to perform some sort of pivot?
Yeah, look, I think many of us, do this 2 or 3 times during the startup experience, maybe more. And I think it's actually a positive thing. It's a little bit like, when we build relationships with people or grow as kind of ourselves, just in normal life, there are things that we realize that make us do different things or take turns or change where we live or where we work or whatever. And it's actually a positive process because it means that you are being conscious, you're listening, you're evolving, etc. So I think the biggest advice is don't be afraid to pivot. Pivot is actually positive. And also, I think in a lot of ways, it's important to remember that investors, in many ways, back you in early stage as a founder, you as a founding team, and they make a bet on you as a team more than on a very specific thing you're doing. Yeah, they definitely want to make sure it's like still in the same space, but there are also plenty of examples where companies became super successful. I think recently I heard this like YC story of Brex, how they were building something like a VR headset, and then they figured out it's actually not going to fly, so they basically switched the space and became a spending management solution, now one of the most kind of important and one of the biggest ones in the States. And the learning is like YC didn't really care what they do. They just backed smart people and said, guys, look, have fun, listen to the market, go build something cool. So I think that's the mentality to follow, obviously to a reasonable extent where you don't want to like play around too much. And then the way it went for us, it wasn't easy. It wasn't easy because we set out to build something and we had a product in market that was used by, a few hundred customers at a time. And so we spent a lot of time, money, and efforts to acquire these people and to get them using the product. And we literally told them like, look, guys, we're not going to let you down. Please trust us. And this is finance management. This is not like, like you can just like move some cards around. It's like a fun tool. This is a serious thing for them that they rely on it. And the transition meant that we can't keep doing both. We tried to see if we can do both for a while, but we couldn't. And so this meant killing all the SMB base and transitioning with an uncertain future, because every single investor or every single expert would tell me like, oh yeah, but you see embedded finance space is different. Most people in embedded finance, they built something where it's regulated, like bank accounts, cards, FX, something really hard with a ton of compliance where you need a license. So people buy a license plus API. Whereas you guys are planning to do infrastructure in a space that is not formally regulated. Like, yeah, there is compliance involved, but you don't need to get a license. So, and it's front-end heavy, and it's big. And people will always give you like a zillion reasons why not to do this. So a pivot decision is oftentimes a decision where you're changing something that so like the known evil, for something really unknown, and you don't know how it works. You can hypothesize, but you don't know. And in our case, it was extra difficult because the investment required to make infrastructure work was almost like restarting the whole thing from scratch and going back to a pre-seed stage while actually raising a seed round. Thankfully, we managed to do this, but it wasn't an easy journey in terms of just like psychological decision-making, raising more money on something new, and this whole impatience factor where you as a founder, you're always waiting for this moment when it starts to work. So you just launched this B2B platform, it just started to work, but you found something that you can't ignore because people tell you like, look, probably that's the future where it's going, and you want to build something big. So you don't want to build something that is used by 1% of the market. And then you can't ignore that. You basically just got excited about the new traction and you have to give it all up. And that is a very difficult decision to make. but I would always recommend people, take a step into uncertainty because it usually pays off if you execute well.
I think the common theme between what you're saying and my previous guest who worked for SumSub was like listening to that feedback loop from customers, but these minor course adjusts are fundamentally different from a pivot, aren't they? Because a pivot, like what you're describing, is painful and difficult, and it's a positive process. But if you do too many, you can't pivot forever.
Yeah, absolutely. I think that's definitely so. And many pivots also leads to laying people off, which is difficult, especially in the early stage, because like hiring a team, making them really productive, like syncing everyone up, means that they're really good for this purpose. Sometimes when you pivot, the same people just can't do it anymore. Like for example, we had to change a large chunk of the team because doing API first was very technically different from what we did before. So product and tech functions had to change. And then the other piece to remember is that this constant iteration is fine, but for these to be, let's say, not so stressful, you just need to have a lot of runway. So my learning and advice to earlier stage founders would be don't spend much money until you feel like it's really starting to take off, like really, really starting to take off. Some businesses are harder kind of to navigate that way than others. But in a nutshell, if you have 3 years of runway, you can do 5 pivots, no problem. Like no one's rushing you. Like you can learn, talk to the market. Maybe they don't want this product. Maybe they want another product. Maybe you want to do something from a different angle. You gather really clever bunch of people, the minimal bunch of people you need to produce something with, and then you just listen to the customers and iterate and iterate and iterate. And you can call it pivot or you can call it something else, but that's pretty much it. And I think the new trend in the current market is also like keeping your burn rate so low that even with minimal revenue, you can actually cover your expenses to a large extent. I think that's pretty much the opposite of how we built the infrastructure business because we just had to burn a ton of money to build something that people would even consider buying. But for anyone who's doing something else than infrastructure, which I, by the way, highly recommend, infrastructure is hard. You guys can just like secure more runway for yourselves. And go with that. I know founders now who are second time founders who like literally go and say like, look, I raised my seed round. I have 4 or 5 years of runway. And that's very smart because they know they'll have to pivot. They know they'll have the learnings. They know they might have a couple of moments where their business might not make sense to them anymore at all. But if you have 24 months of runway, or 18 months of runway, or 12 months of runway, this means that you will want your business to make sense. And so many people, they say, look, but now if it doesn't make sense, I don't have time to go right or left. So I have to keep convincing myself and others that it makes sense. Then they raise more money and it still doesn't make sense. So I think this like brutal honesty with yourself alongside the strategy of securing longer runway for the uncertainty is my biggest recommendation.
I like that, and look, that theme is something that I've heard from other founders, and you read it in books by like Peter Thiel, and I think back in 21 we got to a scary point where you had businesses in Series B and they hadn't achieved that product market fit yet, and I think that's what you're talking about is PMF, isn't it?
Yeah, exactly. Yeah, and I think it's very tricky, right? Because sometimes you close deals and you have theoretically a large amount of revenue, but it doesn't mean PMF. And I think it's all about the narrative, right? I would say there are many businesses where there are ways to tweak the data to see what you want to see. It's sort of a confirmation bias type of thing. And that's one of the biggest business risks, right? But then there are multiple factors that play a role. Like for a lot of people who did businesses in 21, 22, I mean, they could just keep raising rounds, do secondaries, and be well off, even if the startup fails. And that does create a sort of like an inverse incentive for a founder to just like keep making it look good. But at the same time, I think there is just this fear to fail, and especially common in Europe, where people don't feel good to say like, oh, look, actually, this business model I came up with, it makes absolutely no sense. Like, it's not going to work. Like, that's very scary to say, and especially European investors, they get super worried. Like you talk to the American VCs and founders, they're a lot more chill about this. They're like, oh yeah, like we started with this thing, it made absolutely no sense. Like no one wanted it, so like we pivoted and then we did this thing. And by the way, no one wanted it either, so we thought about it again and we did something else, and they consider it fun. So that's I think the approach I'm trying to kind of develop myself. Not easy, but that's the approach. Like try different things, see what works. It's just a conversation with the market. And someone told me recently an interesting thing. They were like, look, man, if this was easy to do what you do, you would already be like number 10 player in the market. But you're like among the first players because it's really hard. And like, it's not clear that it works. That's the whole point of innovation. Like, it's really unclear until it works. So for a lot of people, they sort of want to almost have a guarantee before it happens, but that's not really possible. And that's fine. So just having this psychological resilience, to be brutally honest, is one of the biggest assets we can all have.
You touched on a great point there, which is you're actually a completely distributed team. Is that right?
Correct.
One of my favorite subjects in startups is the issue of productivity, and within that, tooling. Now, I know from one of our previous conversations that you are quite big users of Notion. Can you
Yeah.
tell us about how you use, like how you run your company through Notion, and yeah, any insights from that?
Yeah, I think it's a great question. And maybe first some background of why we're remote first. So originally we actually built a company in Berlin. And the idea was to have everyone in Berlin, and we actually went to the office, etc. And then I think then COVID hit pretty much right away as we started building, and the world became remote first. So then we pivoted into infrastructure, which also didn't help because in infrastructure you're looking for a very specific type of talent. And Berlin definitely wasn't the place to find this talent. It was more like Amsterdam, London, New York, SF, or Tel Aviv. And we realized that like we basically have to make a decision between hiring the best people for the job. And by the way, the talent pool is always limited. Like you can't hire anyone you want. Like you can hire people who are also keen to join you, but not just anyone. We're lucky we found really good guys. So we had to make a decision between we want the best person for the job or want a person in a specific geographic location. And then we went for the first one because we thought like, look, we just need to build a market leader. And for the market leader to be a leader, you need to have people who can do this. So that's how we started making those decisions. And when you have the first person there, then you hire the second person elsewhere, and you're like, okay, well, now we're in like 4 or 5 markets anyways. Now it can be fully remote, right? Like, doesn't matter anymore if we have five different locations or 25. It's going to be more or less the same that you have to fly everyone to a single spot to have a meeting. And so we kept going that way. That's how we became fully remote. And after COVID, what happened is, a lot of people still today try to bring people into the office. But a lot of great people you can hire, they're the ones who have the freedom of choice. They can work for any employer. And many of them have kids. Many of them have their life set up. For many of them, remote is really preferred. So you can't just tell them, oh, look, please come to the office. Like many of them will say, look, you force me to do something I don't want. I'll just quit and work for someone else. So I think that's an important thing to remember. Like all these job market trends are irrelevant for the top people. Top people are always in demand. Top people always get great salaries, and you got to keep them very happy. Then shifting on to what you said about productivity, we tried to be very deliberate with how we built it from scratch. So we tried to build pretty robust onboarding processes and our proprietary learning courses on our industry and on fundraising, for example, for developers, because the typical developer joining you is like, hey, what is this like seed, VSOP? Like, what the hell is this? Like, how does this work? Like, why is this guy giving us money? Like, what's his benefit? Like, this type of stuff. And so we tried to invest enough money into education and onboarding. I think it's not enough, but, we did some of it. And then we tried to build a tooling setup that is extremely simple where, especially with tools like Notion, you can actually like cover for 5 different systems in one, where you have like project management, you have the boards like in Asana, you have databases like in Excel, you have Word documents like in Google Doc, etc. And we just said, guys, look, we know all of you coming in, you'll want to use this and you'll want to use that, but we'll only use Notion. So like, and Jira for development. So like Notion and Jira, minimal complexity, And we enforced this. Like there was a lot of frustration from some people, but we still enforced it. So that really helped. This tooling made a big difference. Plus, of course, Slack for communication. And then the core aspect we had to invest in early is people seniority, because once we went remote, you can't really control and see how people work. So you gotta adjust the fundamentals. The hiring process has to include a big section of why people are motivated and why do they want to do this with you. So we started screening a lot more for intrinsic motivation that is not linked to Monite. This is like, hey, what do you want to do in life? Like, how does a Monite type of play help you achieve what you want to achieve? Like, we needed to make sure that people have their own motivation to like wake up, go to work, do something cool. Then second is we try to screen for seniority and ability to work remotely, because some people literally, like, it's hard for them. And we typically hire people who are very comfortable and who are like, look, I have my superhero setup. I wake up, this is my routine. Then I have this cool desk and I have this cool monitor. And by the way, I do this and I take a power nap and then I go for a run and I come back and I'm super productive. Like, everyone has their own way and we don't limit people. We just say, like, look, be present for team meetings. But otherwise, like, you want to go for a run at 3 p.m., go for a run. Can't care less, like, as long as you do your work. And so these people are fairly easy to find if you are asking the right questions, if you're screening for it. And then you get these people with the right tooling who are also very motivated intrinsically. And the productivity is not really a challenge unless you actually, screw it up on an organization level and start scheduling like 10 team meetings a week. So they all start complaining about the number of meetings. So that was the only problem we faced. And that problem we solved by introducing 2 no meetings days, which is hard, but possible. So we have Tuesdays and Thursdays without meetings, and we try to enforce it to a reasonable extent. So in a nutshell, hire senior people comfortable with remote work setting, screen for intrinsic motivation, ensure that there is consistent tooling use that is minimal and simple enough to follow, and make sure there is enough time to work, focus time, or just ensure that the general work setup is fine.
I just want to pull at one thing, which is the screening for intrinsic motivation. How do you do that? Are you using like a big 5 personality test? Because I think there's a trait called grit or conscientiousness. Like, I don't know, how are you identifying these traits?
Look, I guess we should use something more objective. I think largely it's a gut feeling. In the beginning, it was mostly my gut feeling, or the gut feeling of my co-founder. But over time, I think it became the team gut feeling. The questions we typically ask is we just say, like, look, you had a certain journey, like, where are you headed in general? What do you want in the next 5-10 years? Like, really unrelated to us, just like, what's your thinking about your career, your life path? And, people actually do open up. And some of them say, look, I want to work in tech maybe the next 5-7 years and then go have a surf shop in South Africa. Or like, hey, look, I actually want to be, somewhere else until I found my own company. But look, I want to find something now that really teaches me how to be a good founder. And I don't want to move on and co-found, et cetera, et cetera. So people open up with a story. And depending on a position, this does or does not make sense for them to join us in a specific role. And what we try to do then is we try to say, look, that's great. Let us tell you a little bit more about what the role entails, where it's going, how we see this, and you tell us if this sounds like a fit. So we try to be very transparent and open in the first conversations. And people who typically do very well, especially in leadership roles, are future founders. They just come and say, Ivan, in 3 years, I want to go found my company. I want you to teach me how you do this. I want to be exposed to investor topics, this and that. But after we do this, I go found. Or like in 3 years, I go found. And that's very fair. Like, those people will work their ass off. You don't have to like even ping them. They will ping you, right? Because they have high motivation. Some other people will have a different learning path and they will have a different motivation. And they will, for example, will want to learn something really cool in tech. So they'll ask you for a really hard technical challenge so they can grow in this field. And they'll ask you for like money for courses or go to the conference or organize some coaching sessions with like whatever founders or frameworks, which we also do for developers. And so screening for these things is not super hard. What is very hard is scaling this as you go past a certain team size, because you can't keep screening every single employee. I mean, I still talk to everyone coming in, but you can't keep doing this at large scale. So investing into the team to have this level of quality, this level of screening is key. And the measure we introduced to do that is basically to just say, like, look, Ivan comes in the last stage. So what's the success rate of candidates that passed you guys but did not pass Ivan? And the closer it is to 100%, the better, right? Because then if they screen a candidate that said, like, look, we absolutely believe in them, and then they didn't pass me, something is really, really off. And I think in the last year, out of like, I don't know, 10, 15 cases, we maybe had one. So I think the team is in a very good level. And now I sometimes feel like they're harsher than me on culture fit and on like motivation fit. And I'm like, okay, guys, look, let's, be a bit more liberal. Let's give this person a shot. But that's the hardest thing to do.
Yeah, I like the self-policing of the culture. And one of the things I picked up there is you're looking for a lot of things which is the complete opposite of how interview processes work. You're looking for people that are kind of self-aware and often putting that authenticity above anything else. So they're like, well, look, this is who I am, this is how I work, and this is how I feel, and I don't care if you don't like it. And it's actually that authenticity that is one of the most important traits for you by the sound of it.
Correct. Yeah, I think it's just like, I mean, we just know what it's going to be like, right? There is a lot of pretending in the job search world. Then you pretend for both sides, then you start working, then you get frustrated, then, people quit or are fired, and like, what's the point, right? Our whole culture is built on this very like transparent attitude. I encourage, for example, people who report directly to me to take a chat with our chief of staff or someone else working with me and ask them like, hey, what are Ivan's shortcomings? Like, where can he be annoying? Like, what should I be ready for? Like, what's his work mode? Like, can I even handle this dude? And we encourage people to do this openly. Like, we even speak about this in public setting. I love when people say on the call, like, Ivan guy, like, oh my God, sometimes you just want to hang yourself working with him. Here's why. Like, here are the positives. Here are some of the things you need to watch out for. And we love to be open because we love to be real. And then if a person says yes to that, they're pretty conscious about what they're signing up for. So they won't complain a month later that they had no idea. And I think then we also do an additional thing where our case studies are pretty elaborate. We actually have pretty low success rate of our case studies in the sense that like many people don't pass them. We give real life exercise to people. Like we're not giving them some theoretical planning, whatever thing. We're just saying, look, if you come into your role, one of your first tasks will be to do XYZ things. And they usually go around one thing tests the hard skills and one thing tests sort of like just general attitude, strategy, soft skills. And first, many people take shortcuts and send us like a bullshit case study, so they're completely out. Some people do it and, they do it in a good way, but they almost like complain that it's like too much. And then there is a specific type of people who do something, we open it, it's like, really? What the fuck? We didn't even think about this. Like, oh my God, did you see this page? Like, how much did this guy spend on the case study? And then you talk to them and they're like, yeah, 3 or 4 hours. It was very easy. You're like, wait, what? So, like, we have 25 people who complained, like 5 people who did it, but, like still said like it's crazy amount of investment. And 1 or 2 people who just did it in a couple of hours. And those are the people we hire. And so I think it's just this combination of being very authentic in how we talk, and then being very authentic in how we actually test the work. Because a lot of people theoretically get it. Like, hey, we work hard, we solve hard challenges fast, and this and that. And they're like, yeah, I'm exactly like this. And you give them a case study, and then go like, oh, no. Like, that's too much. Fine. So I think that's the formula. You need to talk openly, but you also need to work openly on a case study. And then, if the case study is good, we don't discuss it in the call. We actually discuss something else because it's that good that you don't need to discuss it.
Yeah, I'm a big fan of case studies in general. And there's been a bit of a backlash on LinkedIn, what you described with people saying, oh, I shouldn't have to do this. It's too much work for an interview. It's, people are expecting, they're lazy. I'm looking for another word, but actually it's just lazy.
Look, I think it's a combination of two things. One is I think like you're lazy when you don't feel excited, when you don't feel the chemistry, right? It's like I don't know in dating, like if you go on a date and you like someone, you're keen to put in the time, although you don't know if it's actually going to lead to something. You still need to put in the time to find out. So when we talk to people first, we try to sense this chemistry, and if the chemistry is there, we do our best to excite them. To excite them, not like, hey, look, this is a great opportunity. It's more like, hey, what do you want in life? Like, where are you headed? Great. Let me map this out for you, why this could be a great fit, right? And when they see that, and when they see the genuine and open attitude, and I talk to people openly about like, hey guys, I just want to be really upfront. Like, look, I'm like, you'll learn a lot here, but I'll be really annoying. Or like, look, we sometimes like work long hours and we grind and we're a bit crazy, but we're really good people. And like when people hear something like this and they see how it fits into their trajectory, they go like, I really want to do this case study. Like it's fun because I like this guy. He's cool. And we often have people sending us like a follow-up note that is like really not generic. Like, hey dude, like really enjoyed the chat. Like feel almost like at home talking to you guys. Those are the indicators that they'll put in the time. So I think for companies, it's also important to remember that it just needs to be human. Like you cannot say, look, we do a standard interview with HR that is like super boring and like not exciting, and then yeah, please go put in a few hours of your time, or like 4 or 6 hours of your time to put together a case study. The person thinking about this, they're like, statistically, I'll apply to like whatever 10, 12 jobs, and I can't do this for 10, 12 jobs. It's super annoying. I don't have this time because I'm also probably employed or have other stuff to do. And I think that's the secret. Stand out from the crowd so people are motivated to do this for you.
Good. One of the last questions for you, Ivan, is around go-to-market. So there are lots of different models. You know, product-led is a big thing at the moment, and you yourself, you came from a big growth marketing or growth hacking background. You know, I'm a salesperson. What's the sales motion or the go-to-market motion that you guys use at Monite? And like, did you get that right first time? And how has that evolved?
Yeah, I don't think we got it right up until now. I'm actually very, very demanding in that sense of myself and others. So, look, so I come from a background where I did growth marketing for most of my career, and most of these things were like literally demand gen online. On topics where there is a clear market and clear demand, and you just need to make sure that you know how to map all that like big pool of demand out there to your products, to your landing pages, convert it all into leads, and work with the sales team to actually convert them. Or in Penta's case, it was a typical SaaS, so people could just self-convert, right? It didn't actually need much effort. So I come from the world where it's a very different growth game. And when we started the company, the plan was like, this is my skill set. I know how to get SMB customers online. I'm just going to go do this. But when we transitioned into infrastructure, it became a whole different thing, because early days of this type of business are B2B sales. And it's a very different thing. Like, yeah, you can get some leads online, but you can't really get the leads online in a market that doesn't exist yet. And when we started, there was no one searching for like embedded invoicing or embedded accounts payable. Like the search volume on Google Ads was zero. And so you can't just go buy these leads anywhere. You have to like figure out how to get these people. So that was one of the hardest challenges for me, and still is, how to get demand gen running in a same pace as it was run by me and many companies, including Penta. So what we did is we did founder first sales, and we closed the first customers ourselves. Friends and family network, outreach, conferences, like we used everything we could use. And then we got our head of sales, I think like right after we transitioned into infrastructure and closed first business. And then he brought us to kind of around $1 million in revenue. And then from there, we started building a more, let's say, professional sales team, SDRs, et cetera. So like doing more sales demand generation. And that really worked pretty well, because we started developing this formula of like who we need to reach out to, how do we combine inbound requests with outbound requests. And we invested quite a lot of money into things like PR or like LinkedIn marketing or other things, just to increase visibility. Because a lot of people thinking about it, they would just like ask around like, hey, have you seen something like this? And it was important for us that like all investors know this, all like key product people in the industry know us, et cetera, et cetera. So that worked pretty well. What's tricky though is, sales are pretty I would say like it's a very structured and clear thing in the industry with clear demand structure and value prop. So for instance, you're selling B2B payments and you want to install payments on your website, or I don't know, like you just want to power up effects or something else. You have a clear use case, you have the data on what you need to process more or less, and you just need to find a provider that is the right fit, which is a combination of technical solution, overall provider reputation, price, and a couple other parameters. So if you're a salesperson in B2B payments, you're just getting some sort of a lead with a clear demand. They know what they need. You can articulate how much they make, and then they'll basically run an RFP choosing between you and other providers. In our market, it's like people go and say like, look, I could embed invoicing, or I could build 5 other features on the roadmap, or I could do something else. And I don't know, like I'll try to build a business case and see what I want to do. You're not competing with other providers here. You're competing with other things on the roadmap, which makes our sales difficult because every single roadmap is different. Like it's hard to articulate that you're a higher priority. And when you hear Zach from Plaid or like other people talk about it, they all had the same challenge. In a new market, you're not competing against other players. You're competing against other priorities, and you need to win a top 2 or a top 3 max in the customer's mind. And so that's the largest challenge for us. Now, of course, the competition is picking up, and in the US, the market has become pretty intense, especially given the amount of active demand. But even with that, still, the biggest challenge is getting the priority over other things. So I think that's where we are. And maybe one piece of advice I'll give is, I think it's just like really important to keep working on this until it's solid. One of the caveats here is that at some point you keep getting the leads, you keep getting the customers. You might get this comfortable feeling like, okay, we sorted it out. But what you want to look at is not at what you win, but actually at what you lose. Like how many deals have you lost? Why? How many of these deals went to build in-house? How many of these deals went to build something else? That's the real thing in the new market. It's like, what is the opportunity you didn't capture? Because many times you might think like, I solved build versus buy, I'm getting customers. Like I solved the priority, I'm getting these guys, but actually you haven't, because so many others went the other way.
Ivan, thank you so much. I could talk to you for an hour, but unfortunately we're out of time. Thank you very much for joining us today, and take care.
Thank you so much, James. Enjoyed the chat.